are in the world right now. I'm so glad that you're here. This is Jordan with Conquer Trading and Investing, and we're about to take a look at the markets through the lens of Bitcoin and what is going on. A lot of people have called the top already. Jeffrey, you said it like from the very beginning. It sounds like a pivotal session coming up. I'm here for it. I'm glad you're here. It's good that you're here. As far as a pivotal session, it's an important session, but a lot of consistency here. A few things to take a look at over here. And we know that this cycle is different in so many different aspects. Probably the single most important one was that it peaked prior to the halving. In every other session, made a new all-time high prior to the halving. In each and every other Bitcoin cycle, we're talking Bitcoin cycle now, in a way, going from halving to halving. Every 210,000 blocks, the miner's reward is cut in half. In the past, this supply shock has caused a new all-time high in Bitcoin. After the halving. This time it happened before. So this cycle is already different. This cycle is already different in other aspects too, including we know that we now have spot ETFs. We know that we have public companies continuing to be at the bid, obviously led by MicroStrategy. 21 was launched yesterday. Jack Mallers is taking the head as CEO, but behind him is the likes of Tether, SoftBank, and Cantor Fitzgerald. Cantor Fitzgerald is the company of the Treasury Secretary, Howard Lutnick. His son's currently running it. That's a big deal. By the way, in the last 2 days in a row, we saw $900 million of inflows into Bitcoin. Once again, we see those flows chasing price. Institutions are here. This cycle is way different than the past cycles. Now, whether or not you like that the institutions are here, whether or not you think that it corrupts Bitcoin one way or another, it's an open protocol. You do not think that Bitcoin's adoption was going to continue without Wall Street, institutional money, government, and central banks. That's what's unfolding here today. Now, a lot of things are different as well. In the past, you've seen before Bitcoin here from the 2016 halving. It peaked roughly 500 days after the halving, which was very similar to what you saw over here. You have roughly 530 days. Now, so far past the halving, how many days are we? A lot of people believe that we've peaked pretty early, 261, which would be the earliest peak on record. And I'm going to give you a little bit of insight of why that's highly unlikely. When we talk about this being a pivotal session, there's no pivot here. There's consistency. I have maintained ever since we broke out over here on 17,250, bull market breakout. Did I know that was the low? Absolutely not. The whole time we look for an invalidation. That invalidation has never come. What would be a pretty strong indicator that something's wrong at this point? If you look back after price has broken above the 0.786 retracement fib, it's never taken that out. You can see that we came very close during the previous bear market after the collapse of FTX. Over here, we're currently above it. So far, we've never taken it out. In the description of this video, if you scroll down a little bit, is a video that says, how would Bitcoin act in a recession? I think that's a video that everyone should understand. Everyone should just be aware of and take nothing for granted. By the way, we did see an incredibly positive sign over the last few weeks. As equity markets have corrected roughly 30%, we saw Bitcoin also correct roughly 30%. Now, in the past, the ratio of the Bitcoin drawdown compared to equity markets has been substantially higher. That's a very positive sign that adoption here is taking foot. What I would like to see going forward and for this cycle, and as far as something being pivotal, it's consistency. Expectations are that the cycle peak, and defining cycle over here from halving to halving, is going to be closer to the 2028 halving than the 2024. Lots of people have called the top already. Some people likely are expecting the top to come into the fall, into December, into November. And likely that's when you'll see, if that's when you're going to see a lot of top calls. If you go from the bear market low into the cycle top, you have roughly 1,000 days. 2016 cycle. 2020 cycle, you have roughly 1,000 days. So you might want to know, for awareness sakes, where 1,000 days currently put you out. So out into October. Out into October. So fall, be aware. Markets have a habit of absolutely crashing in October. And if they do, lots of people will be calling the top in Bitcoin, no doubt. Lots of people in November and December will be looking for the top. Lots of people already called the top. All right, let's take a look at something that might help you kind of put this together a little bit further. This is Decode putting out and working on. He just put out another update this morning. And in this description here, he's like, look, I'm just trying to figure out a way to visualize the business cycle. And he points out that once over here, the oscillator turns green. Currently, we're deep in the red. Once it turns green, there's roughly between 8 to 14 months until you see the peak of the business cycle. Now, I want you to, for 1 second, focus on the Fed cycle. What's happening right now as Bitcoin here is trading above $90,000? The Fed is currently still tightening. Remember, monetary policy does not yet align. I've always said that the bull of all bulls does not begin even running until monetary policy aligns. Right now, we're looking at rates elevated, and we're also looking at still, even though it's a smaller amount, we're still looking at the Fed running off its balance sheet. That's soon to change. Very soon, you're going to start seeing the Fed's balance sheet begin to rise. Don't confuse that with QE. It is for sure accommodation. QE, or what we talk about as outright QE, is when they have no choice but to come in and flood the system to keep it alive. They don't want to do that. They don't want to cause any type of rapid devaluation. They will do it when they need to do it. And at that point, in order for that to be effective, they need to go ahead and they need to get rates as close to the zero bound as possible. As Ben Bernanke said, I believe 2016, could have been 2012. It's the only way that it works. Monetary policy does not even align. It'll be a lot closer to aligning once the Fed stops quantitative tightening, running off the balance sheet, and then the balance sheet begins going the other way. That should be accommodated for risk. That should help equity markets, and equity markets probably feel the love first, although that this time is different in the extent of the drawdown we saw coming out of Bitcoin. Great to see you in here this morning as we get started for today's session. Let me just jump back over here. Great to see everyone over here. Yeah, I'm all about it. By the way, we did 21 will be at the bid. We're looking at, of course, MicroStrategy looking to buy every high that it can. And we're seeing that further of adoptioning. Let me come back over here quickly into the business cycle. You can see that currently we are not even in the upward swing over here. What happens until we get there, by the way? Again, watch that video below. Today, you can see equity markets responding very well to unemployment claims because we're not seeing any cracks in the job market yet. Although a lot of headlines and a lot of worries out there, and it's hard out. This is mainly why I'm live today, because you see a lot of doom and gloom all over the YouTube, all over the Twitter, right? So far, and the Fed is very consistent even today saying, listen, if there begin to be cracks in the job markets, that's when we will begin cutting rates. We're not cutting before then. I mean, they did cut before the election, but that's neither here nor there right now. We're not seeing any of the hard data fall apart yet. If we begin seeing a rise in inflation through PCE, if we begin seeing the retail, the consumer in the United States fall off, if we begin to see layoffs, companies right now are not signaling that they are looking at a coming recession. That could happen between today and between Bitcoin peaking closer to 2028. So navigating this takes a lot of thought and attention. I'm just trying to give you, this was incredible. In order for this cycle to continue to be as sustainable as possible, I would like to see this trajectory, this channel that we're currently in, last as long as possible. If we break down over here, that suggests that we're looking at a deeper and longer lasting correction. Remember I called that on the breakdown of 94,000? I said if we break below there, the drawdown is going to be longer and the correction is going to be longer. And a longer time frame, if we break down outside this channel, the same thing will happen. It's going to be a longer and deeper drawdown and longer lasting before we recover from it. The longer we stay in this channel, the healthier it is for a continued length and rise up. If we break out to the upside, that suggests accelerated price behavior, and why I don't anticipate any type of blow off top. We could see accelerated price behavior that usually ends with then a reversion back into the mean. So we want to stay within this channel as long as possible. We almost broke down. Let me just zoom out a little bit, give you a clearer look over here so we can see together. And you can see that this is the channel of sustainability. As long as we're in this, it's very healthy. We broke down. We had over here expectations ahead of the breakdown of where we might come into. We missed it by a few $100, $1,000 for sure. And then you could see that we've recovered the channel and are back into it. That's very healthy. Actually, that's a liquidity grab. This is extremely, usually when you see this type of behavior, whether it's to the upside or downside, a failed pattern usually ends into a very nice move the other way, which does not mean that we can't break back down outside of this channel. And if we do, and we take out this, that's the breakdown. I said, if we break down over here, the drawdown will be longer lasting. Does that mean the cycle's over? The cycle hasn't even begun. And this is coming from someone who called the bull market breakout all the way down in December of 2022, why everyone, most everyone, was extremely, extremely bearish. This is what we're looking at right now as we're looking at this new wave of adoption. We've entered, you're an early adopter. We are now into the early majority. And it's still so early, it's ridiculous. It's once you get into the late majority that you will see for sure a strong degradation of the volatility within Bitcoin. Right now, though, we're not even close to that. Look, something like this, that's a bear market that's long lasting. Does this insinuate that at this point in time is when we're going to run into a bear market? Absolutely not. You could see many deviations between the two that we're looking at. What I'm trying to show you mainly here, and the most important thing that I'm trying to show you, as many people look at this, you can see the trend lines over here from the hype phase. Most people think that Bitcoin's trajectory is going to be like diminishing returns and something like this. That's not how S-curves work. You will see Bitcoin as it enters the ultimate market opportunity once again towards the top quarter, top third of its trend lines, as you've seen in the past. Bitcoin right here today, as the NASDAQ is responding very well, equity markets responding very well to today's unemployment numbers. You are seeing very beautiful consolidation at Bitcoin. Look at this over here since our discretionary breakout, right? The first upside breakout we took. You could see, and by the way, here's that 94,000. I said it to you earlier. On the breakdown of this trend line I'm highlighting, we said if we break that down, my expectations and my hope was that we weren't going to break down and we were going to make the next leg up, new all-time highs. We broke down. Prior to the breakdown, I said if we break down from there, the extent of the drawdown is going to be much larger and the duration it takes to recover is going to be longer. We're still in the midst of that and it's not over. We have not yet made the repairs we need to invalidate that. And the most important repair that I want to see is going to be reclaiming that broken trend line of the breakdown, which is all the way up above 100,000. Now, this was our first repair. And that repair took a while, consolidated, and finally we've made the leg up. And you could see so far after making that leg up, what has happened is we've come back down and we're retesting that last bit of structural resistance, trying to confirm that as support and continue upwards. This is interesting over here. This is lining up previous cycles from their all-time high. Let me just go ahead and reset that for 1 second with you. This is lining up the previous cycles from the all-time high. And then I had put in this before, this little drop zone. Let me raise this actually up into there. Wouldn't it just be funny? I don't think this is any type of analysis. I don't think that if it happens, if we see during this drop zone between now and the summer, all three cycles aligning, I think it's much more coincidence than anything like that, but sure is fun to go ahead and see if that were to happen or anything like that. Someone said earlier, and I think that it was good fun. Like, good morning, gamblers, right? Words are very important. Anyone here should not approach the market whatsoever with anything resembling and or close to thinking that what you're doing is anything but working very hard to have calculated returns with calculated risks. I want you to go ahead and listen to this for 1 second. It's about 30 seconds.
So there's a wonderful researcher at New York University by the name of Emily Balcetis, who talks about how for goal setting and habit formation, fear setting is often one of the best tools. You spend some time, maybe 5 minutes or so, thinking about all the terrible things that are going to happen if you don't actually accomplish your goals. Nobody likes to do this, but guess what? It turns out to be pretty darn effective.
Really?
I know. It's really frustrating that this is the case. But again,
how many of you, how seriously do you take your trading and investing? How many of you have taken the time? Unfortunately, it's very easy to pick up your phone, enter into social media, and start scrolling. Just start scrolling. How many of you have taken the time to put down your phone, to put down all distractions, sit with a piece of paper in front of you, and really define what are your goals for being here? What are your goals for investing in the market? How are you going to get there? What's your goal for the next 6 months? More importantly, what's your goal for the next 2 years? You've often heard me say that most people overestimate what they could accomplish in 2 years and drastically underestimate what they could accomplish in 10 years. What is your 5 and 10-year goal? And by the way, compounding, the difference between a 10-year goal and a 14-year goal is absolutely exponential. How many of you are going to be here 10 years from now? And those that are here 10 years, I imagine that you have not only knocked out beyond your expectations of what your goals were, you're exceeding them. And now you're working on what you could do for your children, for their children, and those around you. But you don't get there without actually putting that time in to figure it out. This is not, if you're gambling, you're going to lose. Calculated returns is what you need to do. This is our current positioning across Bitcoin and crypto. Currently long out of nowhere. And all of a sudden, picking up, led by Ethereum and Solana. I'm sorry, led by Solana. And then Bitcoin and Ethereum entering the market on the long side as well. Solana continues to push, currently 8.4% into profit. Ethereum 4% into profit, and Bitcoin just under 3% into profit. The bull market template, BTC bull runs, has exited the market. I want you to remind you, just a quick refresher over here, the win percentage here is 20%. By far, let me just run these through you over here. If you look at Bitcoin, win percentage is 38%, Ethereum 34%, Cardano 40%, Solana buy side only very high 62%. It's very low on Bitcoin bull runs. But more importantly, if you look at the average winning trade, it's 356%. Why the average losing trade is 2%, which means that every time you take a trade, your risk to reward is you're risking 1 to make 150. It's an incredible risk to reward over here. Drawdown over here since Bitcoin's inception, very, very low. This signifies that momentum has the potential to last once we enter into a trade. I assume if we make the recovery we were just looking at from the discretionary standpoint, that Bitcoin bull runs will be very back in the market very quickly. This is looking at our solution here for the spot ETFs. You could see that on the IBIT, we've just entered a trade. It's currently just into profit, and we're going to keep and continue monitoring that. We talked about first Solana entering on buy side boost, entering the trade. It was up 4% when Ethereum and Bitcoin took their buy side entries, locking in 4% of 2/3 of your portfolio, now currently holding those trades. All of our Bitcoin buy and sell models are currently long the market over here. CTM 2.0, the classic and the original. That's why we stopped going public in 2022. In 2022, I said no longer will we rely on 4-year cycle behavior. We're going to use our technical analysis ability and skills to navigate the market. And that's great. TAs for fun. Be the best at it anyway. We've leaned in 100% into mechanical straight trading, calculated, thoughtful returns. Ethereum still holding its trade over here. And then, of course, Cardano is out of the market. And I wonder if it's going to play catch up and be able to join into the rest. Solana long over here. Moving over to equities. We've been out of the market, right? We've been out of the market since early February across the board, except for one trade on Tesla. This one trade on Tesla, the red line was like we made a discretionary move of moving our stop loss to break even instead of the 1.7% stop loss. The trade had gone up 10% within the hours I've taken it. Probably should have, but we that's a very rare discretionary override. Being on the sidelines during this correction and preserving capital ingrains in everyone how important it is to have a plan and stick to your plan in order to get to be where you want to go. We're getting close to some potential entries over here. Earnings season is upon us. We just saw, and I'll show you in a second, a very important wedge breakout underway on the NASDAQ. And we could see that Tesla is getting pretty close to potentially entering the market, followed by maybe NVIDIA. And we were looking at some discretionary. Look at that. That would be NVIDIA's exit entry on the breakout. And yeah, TQQQ and FNGU are lagging behind, but it would be nice to see some breakouts of into the market. I want to go back down over here and I want to just show you really quick where we left off. Yesterday, we were looking at FNGA and we were looking at, as you can see over here on the open, a nice breakout outside the conservative line over here. I know that Doggy Nation was looking at Nail and has been all over it. That should be breaking out as well. Look at that. So he and we talked about it together. Like we worked together. He had caught the knife, and I mean, in brilliant, but very, very dangerous. Obviously, very well done. Well, we'll leave that as it is. Here was the underbelly breakout. If you go into the Discord and you look in the Nuggets channel, the latest, the most recently shared video is the underbellies and what they are in CTM 1.0 discretionary. Right into the conservative line, a breakout of the home builders over here. That should suggest if the home builders recover, that's going to be a strong suggestion that this market has a while to go. If it's rejected here and comes down and breaks down, I would be pretty concerned and worried. Let's look at the NASDAQ. NASDAQ over here is breaking out outside of the wedge. We talked about liquidity grabs on Bitcoin. Here's a liquidity grab to the downside. It broke outside downside on the channel and then recovered and now is breaking out to the upside. Just above us, I want you to focus. Let me come down to a smaller time frame, even though the 8 hour is not really that much smaller over here. You can see on this breakout, we're coming into this area of resistance now. This was the first repair on the NASDAQ. The second repair will be closing above this trend line over here, this structural trend line over here. Closing above it will be the second repair. And then I'm going to put a lighter one in with y'all together. Let me just get a little bit more view and see what's going down over here. And maybe not. But I'm looking at where we just peaked up over here. I don't really see it, so I'm not going to put it. Yeah, I like it right there. And the reason I'm doing that is because my expectation if we're able to close above here, then the NASDAQ has the potential here to carry as its next target in just above 20,000. This morning we saw so as far as watching your risk, obviously right now it's if we fail here and come back into the channel, that would be what is invalidating this current breakout taking place. Markets keying off of, we have the news now, and ever since the Trump was elected, we have to look at the news all the time because we have seen though, probably, remember that the VIX was trading above 45. We saw like peak tariff parlaying. Like there's no headline that is really going to shock you or anyone else at this point. And markets seem right now to be more focused on what lies ahead. I'll put it that way. So on the calendar, though, we just got through unemployment claims. Fed and everyone, Fed is signaling that as long as the job market stays in, they're not in any rush to go ahead and lower rates at this particular point. Next week will be JOLTS jobs on Tuesday, non-farm ADP, non-farm on Wednesday, and then non-farm on Friday. That is going to be very, very important for us to watch, as that is what is signaling how strong the economy is right now. That's what we're watching. Gold over here, finally taking a breather out of the gigantic cup and handle breakout. We said a couple of things before the breakout right over here. We said that the first target was going to be just below 25,000, right? Our second target now, hit much quicker than I anticipated, but I said it's not stopping there. It's I'll see you at 5,000 and then we'll reassess, right? Now it's a whole number 40 from far away, right? If we get to 47,500, 5,000, we'll be looking at it a lot closer. But we also said right now, and I just want you to come back over to these junctions over here. At this point, gold was going pretty much vertical. Gold going vertical, and we pointed out as gold was going vertical that likely it was going to retrace below this fib, that 33,000 that we've traded below, and that likely is going to enter a period of consolidation, which it is. I don't think that by any means gold's move is over, and gold's move is not even close. Right? And that's going to be aligned with monetary policy. Eventually, when they come back in and they do need to have the next devaluation, soon after that is likely when gold will peak. And then you'll see a lot more of money taken out of gold and putting into other areas where there's going to be a lot more expectation of growth. Once we take out the high now, however, well, that consolidation period is over and gold will be looking to make the next leg up. This is gold to Bitcoin. You can see the breakout that we had currently in a retest. Would love to see it invalidated, and every previous breakout of gold has been invalidated by Bitcoin. I'm trying to see where the 10-year is today, and we're just with outside the spike down, the spike up, we are continuing to consolidate in this area. If we close below it, that's when I think that at that point, it's a good idea for us once again to go bid on bonds. And until then, completely observing and or watching. Everyone, your time is valuable. Thanks for being here. on your way out, please do go ahead and hit the like button, share the video, and everyone have a beautiful day. God bless you. I'll see you all soon.